Stan Shamu from IG in Melbourne and see what he's watching today. Now, Stan, I just mentioned a few stocks we're keeping an eye on, but I know you'll be keeping an eye on Japan. You say it's set to lead the region today.
Yeah, absolutely, and it's definitely all about US dollar strength at the moment. Of course, following that ISM manufacturing PMI and unemployment claims that smashed expectations, it really looks like the US dollar is in a very good space at the moment, particularly heading into tonight's non-farm payrolls print. Of course, the US dollar has been quite an underperformer over the past few weeks, and it looks like a reversal is underway now as investors look at different metrics that are showing that perhaps tapering will start as early as September, and this would be supportive of a US dollar rally. As a result, I think that the dollar versus the yen was one of the biggest beneficiaries of the US dollar strength. We did see the pair rally back to around 99.57. It had struggled and was trading under 98 for quite a while over the last 2 weeks, and was one of the biggest reasons why the Nikkei was a serial underperformer. But now, as it stands, we're actually calling the Nikkei up 1.3%. Chances are this will renew some confidence in the Nikkei, and of course with plenty of earnings due out of Japan as well this week from some of the biggest companies like Toyota, then certainly if we do get some beats on the earnings front as well, that should be quite supportive of the Nikkei today. And we really feel, in the absence of any regional data, then perhaps this will be the biggest driver for the region. If we can see Japan break its duck and trade over 2% higher or so today, then this should be quite positive for the rest of the region. But of course, it's all about the US dollar and what it will do for the dollar yen. And with the non-farm payrolls print tonight expected up 185,000, down from around 195,000 the previous month, then it really does look like we could easily get in a situation where we get a beat on that front. And following the ADP number and the unemployment claims numbers coming in very strongly, it seems a lot of investors out there are starting to position themselves for a fairly strong reaction to the non-farm payrolls print. And of course, unemployment is also expected to drop to 7.5% from 7.6%. As a result, if the dollar yen trades through 100, then it could be a situation where next week is all about Japan. And if it manages to hold above that 14,000 mark, then it should be positive for Japan over the next couple of weeks or so.
Stan, let's talk about the Aussie. Because of that greenback strength, we've seen a fall in comparison of the Aussie, down at 89.3 right now. How's this going to impact that RBA decision next week? Do you think it'll mean the board thinks twice before cutting rates?
Well, perhaps not. I think the balance of factors has already shown that they are firmly looking at a cut next week. I think the market's now firmly positioned for a cut as well, which is what's preventing a lot of the bulls from buying up this Aussie dollar. As a result, I think just that bounce off 89 overnight was quite positive. But any moves back towards the 90 region are probably likely to continue to be used as an opportunity to sell the Aussie dollar. And of course, with the US dollar likely to see some short-term strength with all these different economic matrix coming in better than expected, then this should be a double whammy for the currency pair. And perhaps we might see a fresh selling as soon as we see a bit of strength in that into that 90 region.
Yeah, how low do you think it could go?
It's a difficult call, of course, but I think the next level of support, which is probably key, will be around the 87.50. That's where a lot of analysts were looking at their 12-month targets for the Aussie dollar. And after that, we have some analysts in the 85 region. So it's still a bit of a difficult call. But this also depends on what happens on the US dollar side of things. And if, of course, we start seeing tapering in September, then that could be a bit of a further downside risk for the Aussie dollar as well.
Okay, Stan, opening calls from the market today. SPY futures are looking really positive at this point, are you?
Yeah, absolutely. It looks like equities are in a very good space heading into the weekend. We're currently calling the local market up 0.6% to 5,092. So that's quite a good little reversal from some of the volatility and uncertainty in the banking space that we saw yesterday. Of course, with the S&P punching through 1700 and closing at 1707, this is the first time ever that it's traded above 1700. Then it looks like investors will be quite happy to pile into equities and just ride this momentum for now, really. Of course, the banks will continue to be in focus after some of the announcement or reports that came out yesterday regarding that levy tax. So it looks like that might continue to gain a bit of momentum on that front. And as soon as we get more clarity on exactly what the plan is, then this should be something that investors should keep an eye on. Of course, there are also reports that the banks are eyeing Lloyd's Australian assets, so that's a story that we need to keep an eye on as well. But we actually feel one of the best performers today will probably be ResMed. Of course, the company had its fourth quarter report in the US overnight. They've been one of the best performers in the local market, and their stock gained 1.5% following the results. I think they beat on the revenue front and came in line on the EPS front. So it really looks like their business model is continuing to work. They're in a niche market and they continue to exploit that very well. And at the same time, this US dollar strength will give it a bit of a tailwind in the Asian session today. So we do expect it to trade perhaps at a fresh record high again today. It has been one of the best performers in the local market all year, so that's a good stock to look out for. In the mining space, we are also looking for a good start in the iron ore names, with BHP up, BHP's ADR pointing up about 1.3%, so that should extend to most of these iron ore names. But for gold, it might be a bit of a tough session. It pulled back to around 1,311, mainly because of that US dollar strength. So we might see a little bit of a pullback in gold miners, and they might underperform today.
Okay, Stan Shamu, thank you very much for your take on all of that.
Cheers, Kate.
Stan from IG calling the market considerably higher at the open today. A lot of this follows on from our lead from Wall Street. It was a really positive one. For more on the session, I spoke earlier with CNN's Zain Asher.